Thank you. A few footnotes. This slide presentation is a little bit misleading, where it says blockchain's impact. Well, I hate to break it to you, but I don't know what its impact is, and really nobody in the world knows what its impact is. This slideshow was made for a banking audience, so it's important to emphasize that blockchain technology is not a financial technology. It's really agnostic and has many different use cases where finance is the most obvious, but it just requires a little bit of thinking, and you can start going into all kinds of different rabbit holes. Once you go blockchain, you don't go back. It really is a pretty big rabbit hole. So in the audience, how many people think that the banking system resembles a cartel? Raise your hand. Wow, a lot of people. Good. First time I've asked that question. So how many people here own Bitcoin? Good number. How many people are starting an ICO? Okay, a couple people. An ICO is an initial coin offering. That's something I'll get into. So blockchain is really a journey. And for me, it was a difficult one because when I owned my precious metals company, the industry was very conservative and traditional. They like gold because it's tangible and you can shove it under your mattress, and it's something that has preserved its wealth for thousands of years. So then came this weird mystical stuff, this magic internet money known as Bitcoin. But before we get there, I think it's important to look at why we got Bitcoin. And a good way of looking at that is looking at the banking system and money. And right now, the banking system, as many people raise their hands, is really a monopoly on money. If you think of money as a good or a product, there are some forms of money that are better than others. Sometimes they fail. And it really, depends on the steward. For example, in Zimbabwe, you can have $100 trillion and not buy a loaf of bread with it. You can't buy a loaf of bread with $100 trillion. There are different types of good money and bad money. And it's not really the bank's fault that they have become the stewards of money. It comes a little bit from legal tender legislation. So they've kind of been forced to manage one form of money. And they were given this great responsibility about 150 years ago, between 100 and 150 years ago. And that was when money started to stand still. Banks, when they send money internationally today, they're not actually sending money. What they're doing is sending messages from one bank to another to credit one side of the book and debit the other. And so what they're really doing is using, and they're doing that through SWIFT along with other systems, but the basis of that system is Telegram. Banks are essentially transferring money internationally through Telegram, which is technology that's over 100 years old. They're not actually sending money, they're sending messages that rebalances their own ledgers. And their own ledgers are very insecure, so that's why they have a lot of security around them, and they're very closed off. So they haven't had a need to innovate in the last 100 years around the transition of money. So then someone came up with this technology. And blockchain technology was really a number of technologies put together using things like cryptography And what the creator of blockchain technology managed to do was solve this unique math problem that allowed a ledger or a database to show who owns what digitally. And when a transaction was added to this ledger database, it gets replicated around the world so everyone has the exact same copy of who owns what in the world. So he essentially found a way to solve a problem of digital scarcity. So Bitcoin was the first solution to that, but now we are seeing that there is a huge number of use cases around this technology. So when I first heard about Bitcoin in 2010, laughed it off. You know, this weird stuff you can't touch, it's fake. Took me 2 years to actually start accepting it in my business. And then it took me another 2 years after that to really understand the technology, the blockchain, and its use cases can go far beyond money. So that's when I dived headfirst and never turned back, and now focusing in this industry full time. So there's all kinds of new terminology, ICOs, smart contracts, trust, and even the experts are still trying to figure out what the definitions are. So we have a pretty general idea of what some of these terms are, but it is important to start differentiating certain terms. So cryptocurrencies, that is something like Bitcoin or Ether. Digital assets, so those are tokens that are digital tokens that can be created on a blockchain like the Bitcoin or Ethereum blockchain that can represent something like an asset or something like your identity or a vote or a variety of different things that I'll get into. But looking at its impact, you can, this is where it gets really confusing, because blockchain's uses can be used top down, and you see it kind of from the grassroots bottom up. So the top down, those are the ones that are most obvious that companies like banks are using to settle assets and value internationally and amongst themselves. So those are use cases that increase the bottom line of businesses that have been around for a very long time. Those projects are taking years to complete because it requires them to overhaul their entire legacy system or parts of their legacy systems to implement various aspects of blockchain technology in their lives or in their businesses. So then the bottom up, and that's the fun stuff. That's the stuff that hasn't been possible before, that has everyone's brains exploding. And so get to different use cases, and we see, for example, rather than the idea of a Bitcoin that represents a unit of value that can't be counterfeited, it's immutable, everyone knows exactly who owns it, you can replace that idea of that digital token of value to represent something like a vote. So we have this public ledger that everyone in the world can look at and see who owns what. And this public ledger can show who's voting for who. So not necessarily you wouldn't know that who your neighbor is voting for, but everyone would have a digital token that represents a vote for an idea, for a politician, for whatever is being voted on. And everyone can see, so those votes can't be created out of thin air. Everyone sees exactly how many votes there are. Those votes can't be counterfeited, they can't be tampered, and everyone can see where they're going and see where they are for the rest of time. So it's a great way to create transparency with electronic voting. And so that's one use case that has nothing to do with money and finance. And then, of course, some big ones are around data management. So people are, specifically the Estonian government has put all of their healthcare records on the blockchain so that data can be specifically recorded. They can show when that data was accessed and also show whether it's been tampered or not. And so, and also allow for the transfer of that data so that people who are, want to have complete ownership of their healthcare records can have complete ownership of that. And so, when people talk about blockchain, they can start going down this snowball effect and realize that there are a lot of these great ideas. Most of them haven't been implemented yet, that there are some scalability issues, and that blockchain is waiting for something to solve, a problem for blockchain to solve. But if we look at its first app, which was Bitcoin, we might see that blockchain has already been successful. In that over $2 trillion of value has transferred on the Bitcoin blockchain. It's being used quite frequently in places like Venezuela and Nigeria. And for them, it's life and death. So there is a good amount of utility in having a value system that is completely inclusive. It doesn't require a large barrier to entry to download an app on your phone and start using Bitcoin on day one. You don't have to give anyone your ID. You don't have to give anyone your pay slip. And so people in third world countries can find a lot of value in using Bitcoin, especially with remittance. When you go to Western Union, you send $100 back to your family in another country, you might pay $20 to $35 to Western Union. I like to say that we live in a 20% world where we have a lot of different middlemen, and like Western Union, like companies like Uber and Airbnb. And what this technology is slowly starting to do is replace these middlemen with protocols, these blockchain-based protocols. So I'll go a little bit more into that. But I think it's important to, Bitcoin has a really bad rap. The press hate it, the banks hate it, the governments hate it. And if you talk to a variety of people, they might say, "Oh yeah, I love blockchain, but I hate Bitcoin." And so, if you look at it from a symbolic perspective, we don't know if Bitcoin is going to be around forever. But we do know that there is going to be some universal form of currency that anyone can participate in that will allow anyone to send any kind of value anywhere in the world instantly without any permission, and with much lower fees than what Western Union can provide. So we're starting to see the next generation of where this is going, and that is through a shift in capital markets. So if you don't know what an ICO is, it's called an initial coin offering. It's where people are creating tokens on an already created public blockchain to raise capital for a project. And that project would be something like an Uber app, but without Uber as a company, as the middleman. So it's more of a system of smart contracts that connect people who need a ride with drivers, and that 20% goes back into their pockets, and it really cuts out all kinds of different middlemen. So the people who, or the institutions that are at risk of being the institutions that are at risk of obsolescence are middlemen. Companies like TradeMe and Uber and even stock exchanges, because if we don't need them to interact with each other, then it puts a lot more money back into the consumers' pockets and the entrepreneurs' pockets. So those are some crazy ideas and some implications that are going to be felt over the next few decades. So looking at ICOs, one of the biggest issues is their legal gray area. They cross jurisdictional boundaries. Some of the tokens are used as utility, some are borderline securities, and allows anyone in the world with an idea or project to raise money. And it allows anyone in the world to participate. You just need a phone with 10 cents of cryptocurrency, and you can be a part owner of a cryptocurrency. So, and that cryptocurrency can be used for something like calling a car to give you a ride, something along those lines. So we're seeing that this year, the numbers are actually a lot higher now. Over $2 billion have been raised through ICOs this year alone. And it's going to, we don't really know how much it's going to be by the end of the year, but now we see an ICO almost every day. Those are the interesting projects that are bottom up. They're trying to disrupt the middlemen. They're creating decentralized social media networks, things like decentralized cloud storage that don't need third parties. So it's and I can go more into detail in the questions if anyone has questions about a specific one. So these are more of the boring top-down use cases. We're seeing that businesses around the world are starting to look at the technology for increasing their bottom line. We see ANZ and Westpac, they a couple of months ago initiated a transaction for, I believe, commercial property. And so what they're really doing is creating a digital token that represents an asset like a property or a mortgage or a car title. And that digital token can't be counterfeited, can't be replicated, and everyone knows who owns it. So it allows somebody to transfer that digital token to somebody else, and that adds a ledger entry to show everyone who owns that token now, and allows people to transfer those tokens instantly at a much lower cost than what we can transfer assets right now. So we see ASX in Australia, they've been working on this project for about 2 years to move the transfer of stocks and securities on the blockchain so that the shares can transfer instantly, they can be settled instantly, and everyone can prove exactly who owns them, and they can't be counterfeited. The Australian Post is working with a number of different organizations for supply chain management. So it allows, if you can create a digital token that can't be counterfeited, that digital token can represent a good or a product. And if you can tie that token to that product, you can prove the authenticity of that product. So we're seeing companies here in New Zealand like Fonterra using or looking at applying blockchain technology to prove the authenticity of their milk that they're shipping to China because there's a lot of fake products in China for their milk. So there are a number of other companies that are doing this. De Beers is doing it for diamonds. Yeah, so those are projects that are taking a little bit longer to implement, but they are happening, and they're not going to make banks go away. They're not going to replace banks tomorrow, but they are going to make them more competitive. It's going to make them essentially force them to innovate and change their business model because their business models are being drastically disrupted. So here are a few other projects. Zero and Kiwi Bank and RBNZ are looking at a New Zealand cryptocurrency It's basically a New Zealand dollar cryptocurrency. BNC, Brave New Coin, they are here in New Zealand. They provide market data and a variety of different, yeah, primarily just market data around cryptocurrency. So if you see the price of Bitcoin on the New York Stock Exchange, it's provided by companies like BNC, and they're located here in New Zealand. Liberac, they were the Kiwi Bank FinTech Accelerator, and they were transferring Bitcoin to a variety of different Pacific Island countries as remittance because it's a lot cheaper to use Bitcoin rails than the traditional banking system. Flow to Cash in New Zealand, they're implementing into the FPOS terminals so that people in New Zealand can accept Bitcoin and eventually other cryptocurrencies. Here are some exchanges in New Zealand. Cryptopia is doing $2 million in volume a day in cryptocurrency to cryptocurrency trade, which is adding up to be quite a bit. The entire cryptocurrency space is about $5 billion in daily volume. NZQA and DIA, if you think about your license, your passport, it's really a check, a checkbook. It's analog. They're really easy to forge. They are analog. They're antiquated. So now different organizations are looking at creating digital identities that can't be counterfeited, and that is a token on a blockchain, essentially. So future outlook, this is very specific to the banking industry. But by 2020, you'll see that 34% of banks will be going out of business because they're not implementing this, they're not changing. So by 2020, the majority of banks will have blockchain technology implemented in their systems in some way to handle asset transfers. Questions?
Yes, a few. Okay. So, what is the most interesting idea currently leveraging blockchain technology in your opinion?
Ooh, well, that is definitely a subjective question. But my favorite one is prediction markets. So people are crowdsourcing knowledge to predict future outcomes of weather, sports, political events. So there's a great one called Augur, and that's one of my favorites because it allows, just the crowdsourcing of knowledge. It allows the creation of financial instruments in a very different way than how they're currently created. So,
do you think the issue with the size of the Bitcoin ledger and transaction verification delay will be solved in time for Bitcoin to achieve greater adoption?
Maybe, maybe not. So there are all kinds of scalability issues with Bitcoin, and it doesn't really matter whether Bitcoin's already succeeded. So if something else comes along and is better than Bitcoin and makes the costs lower and scalability better, great. Bitcoin's right now is the gateway to cryptocurrencies and the 1,000 different digital assets that are out there now. But it doesn't mean that it will always stay top dog. It will really come down to which ones have the best innovations. And we're still in that pioneer phase where it's anyone's game. So.
What issues do you see around tying a digital token to a physical asset and ensuring the mapping from token to asset isn't counterfeited?
That is a big issue. That's something that people are working on. So it depends on how that the asset is tagged with that, like the private key or that token. So they are finding ways to resolve that, especially around IoT devices that can essentially send data back to the blockchain that show the exact time and location and different data like temperature in real time. So people can track the location of those assets and get real-time feedback on a blockchain like the Ether or Bitcoin blockchain.
Actually, what's your opinion on the Ethereum virtual machine? Oh, shucks. Sorry. Yeah, sorry. What's your opinion on the Ethereum virtual machine? Which I have no idea what that is, so I'm sure everybody else probably does.
Sure. So everyone knows about Bitcoin. Ethereum is the second largest blockchain, and it's very different from Bitcoin. Bitcoin's main focus is money, whereas Ethereum's focus is a platform for developer applications like decentralized Ubers and Airbnbs and cloud storage and that kind of stuff. I think just like Bitcoin, it's a great idea. We don't know if it's going to be the one that everyone uses. It's very experimental. It has a lot of support from companies like Microsoft and Intel and Toyota. So you can spin up a Ethereum node on Bitcoin or Microsoft's blockchain as a service. So yeah, it has a lot of support.
Do you think the current ICO gold rush is a bubble?
Yeah, definitely. So yeah, word of warning. If you're in cryptocurrency or if you're not in cryptocurrency, be very risk averse. It can. If you're a gambler, don't do cryptocurrency. Stay away. It really is gambling because although all the ideas are there, we don't know which one's going to execute the best. When Google was created, there were 22 other search engines, but no one knew that Google was the one that was going to win out. And it's very much the same way. Every single cryptocurrency is on the table for being around binary, essentially, having value or having no value.
And what's the best way to migrate data to and from blockchain?
It depends on what kind of data. So there are some issues or limitations of blockchain. People think that, all the data should go on the blockchain. But what we found is it's very expensive to do that. So what people are just putting are hashes on blockchain. So a fingerprint of that data so that you can call that data and prove that it existed and it existed in that state at that time. But it's not real. Yeah, it's not advisable to put actual full data on the blockchain.
Okay. What's the best way to get involved in cryptocurrencies?
Download a wallet. A good one is Copay. Copay.io. You can do that on your phone. Then you have to buy Bitcoin. You can buy Bitcoin from Dasset, digital asset exchange, which is launching next week. So dasset.co.nz. Yeah, Bitcoin's a gateway. Once you have Bitcoin, I highly suggest testing out other cryptocurrencies because you'll start falling down that rabbit hole really quickly when you see how easy it is to transfer assets globally at a really low cost.
Cool. I have a bunch more questions, but we're running out of time, so I'm going to ask you one more. So Oh, sorry.
I thought I'd ask a question that you want to broke in the front.
Oh.
But I heard a question I really like to
Go.
ask.
Yes.
It seems to me that the distributed ledger is there's huge potential for like public service applications. But I'm just wondering whether implementing a distributed ledger is necessarily coupled to the sort of investment in actual very material resources, proof of work and mining and so on.
Yeah, so Bitcoin blockchain is secured by a consensus system called proof of work, which essentially requires an enormous amount of computing power to secure that network, which it takes an enormous amount of electricity and cost to do so. So we don't really know if it's viable long term, but there are other solutions like proof of stake. And I think there's going to be some kind of hybrid between proof of stake, proof of work, plus maybe something that doesn't even exist right now to be able to secure that data at a much lower cost. So Ethereum is, they've been talking about it for the last year, transitioning from proof of work to proof of stake. but it changes the incentives quite drastically and creates all kinds of different attack vectors. So, but I think there's a lot of possibility for that happening, where with proof of stake you have collateral, and you put that collateral up for bond, and so you have to validate everyone's transactions, and if you're lying, you lose that collateral. And it's a little bit more advanced than that, but
So it would actually you would have to come up with real world value to put up this kind. Like you try to set up a distributed ledger, you know, by some crowdsourced sort of voluntary project, you'd still end up with someone that at the end of the day having to put up the stuff.
yeah, that's the biggest criticism of proof of stake, is that it's staked into the network. It doesn't have that real world kind of connection that proof of work provides. So yeah, it's definitely a work in progress. So.
Great, thank you. So if you didn't get your question answered, then come and see Stephen after this. But